Hi, I'm Carmen from On the Money Bookkeeping and welcome to our Business Academy. I'm a qualified accountant, registered BAS agent and fellow member of the Institute of Certified Bookkeepers, and I'm here to help answer many of your bookkeeping and business questions. So let's get started. Welcome to our very first video in our Business Academy channel series. Today we're going to talk about superannuation guarantee changes that are coming on the 1st of July 2022. It's a good idea to start planning for what could potentially be significant changes to your payroll costs from July 2022. At the current time, each employee needs to be paid at least $450 in gross wages every single month before they're actually eligible for any superannuation at all. As of the 1st of July, this threshold falls away, and it means that those employees that are getting paid up to or less than $450 per month will now also be entitled to super. Super is accrued on all ordinary earnings, although there are some exceptions. Now, this potentially has rostering impacts for certain industries that might limit the hours worked by their adult employees to avoid having to pay the superannuation. If you're a business such as hospitality industry business that actually chooses to have large numbers of adult workers working a very small number of hours every single month so that they don't earn more than $450 per month, this will definitely affect you. So on the screen we have some examples for you of before and after, the differences in total wage costs for a business that was previously using this strategy of spreading their hours over a larger number of employees to avoid paying superannuation. Up on the screen you've got a couple of examples of how this might look for a business before and after this change. As you can see, for some businesses, this could lead to a significant increase in total payroll costs because of the extra super that now needs to be paid to those employees. The second change that will be effective from the 1st of July 2022 is that the superannuation rate increases from 10% to 10.5%. Superannuation is slated to increase by 0.5% each year until it reaches 12% in 2025. What you need to consider is whether your payroll software takes care of these updates automatically or whether you need to manually adjust the rate and the threshold. So for example, your payroll software may have a setting that allows you to choose the statutory rate of superannuation. Alternatively, you might have software that allows you to set a fixed percentage rate. If your payroll system has the fixed percentage rate method, it's not going to automatically adjust for you when you hit the 1st of July every year between now and 2025. It's very important to check your payroll settings to make sure that you either have the automatic setting in place or, where necessary, manually adjusting the rate on the 1st of July each year. Many of the payroll systems available today, especially cloud-based payroll systems, are actually going to do these updates for you. We use Xero predominantly as our payroll solution, and these kinds of updates typically take place automatically, unless for some particular reason it's been necessary to set these manually. So have you actually calculated the difference in your payroll costs? Do you have any idea how much extra it's going to cost you in the next year because you now need to pay 10.5% instead of 10%? For larger businesses that have, say, $150,000 worth of payroll per month, this will amount to an extra $9,000 in extra superannuation cost for the next year. Refer to the blog in the description box of this video for examples. Remember, Single Touch Payroll reports the superannuation that you accrue on your pay runs to the ATO. It's very important that you plan for super guarantee payments. It's the most important liability to pay on time. And there are a number of reasons for this. If you do not pay your superannuation on time, you permanently lose the income tax deduction, which means that as a company, you need to pay more income tax because you didn't pay your superannuation on time. The other issue with paying superannuation late is that you then become liable for penalties. This is actually administratively very costly and time-consuming. A form needs to be completed for every employee for every quarter. You need to calculate the interest, you need to pay an administration fee per employee per quarter, and you need to recalculate superannuation on all gross earnings. So in the past, you would not have accrued superannuation on something like overtime, but when you've paid your superannuation late, you need to recalculate and include all the earnings types that were previously exempt from superannuation. So it's a triple penalty. You're paying more superannuation than you needed to, you've got to fill out forms, and you've got to pay administration fees. Please refer to the link in the description box of this video for an in-depth written article for more information. Don't forget to like, share and subscribe so that you're notified when our next video goes live next month.